Episode 2, Candlesticks, was supposed to be liquidity, but I realized there's still probably a lot of people out there that are watching this that are true beginners that still don't know what a candlestick is, what story it tells, the anatomy of a candlestick. Might have a hard time trading liquidity, fair value gaps, order blocks, SMTs, equilibrium, session times, without a good old understanding of what an actual candlestick is. Most anybody that trades with a candlestick chart. As you can see, this is one. You've probably seen one before, even if you don't know what you're looking at. There's no way to overcomplicate the concept of candlesticks, okay? So the first thing I want to get into is a candlestick can represent any time frame, okay? It could be a 1 minute, 5 minute, 15 minute, hourly, 4 hour, daily, weekly, monthly, yearly, whatever it is, whatever you have pulled up, it could represent that given time frame. Within a candle, whether it's bullish or bearish, so bullish means it starts low and closes higher. Bearish means starts high, closes lower. Within a candle, we have two sets of data pretty much. Let's say these are all 5-minute candles starting at 9 a.m. Okay, so the body of the candle is going to tell you where we opened at 9 a.m. and where we closed at 9:05. Now, the wicks are going to tell us the complete range of where price traded to within that 5 minutes. Okay, let's use this candle for an example. At 9 a.m., we opened right here, right at the bottom of the body. Maybe at 9:01, 9:02, we trickle down here a little bit. Then 9:03, 9:04 comes, we start displacing to the upside. And then we come all the way up here, and at 9:05, we close right here. That makes up the body for the open and close, and the wicks for everywhere that price traded to. Bearish example is the same thing, just in opposite. So we started up here at 9 o'clock, traded up here a little bit, ended up displacing all the way down here, and eventually closed, boom, right at the bottom of the body. So let's take a look at these two bullish candles. What is the same about them and what is different? Obviously, just by looking at them, you could see way different stories are being told here. Okay, so in this scenario right here, we started at the bottom and we pretty much were really decisive on where price was going to go within this 5 minutes. Okay, we went basically straight up. Now this candle, we started right here, we came all the way down, all the way up, and then we pretty much just trickled right back down to close to where we started. Very indecisive. The market is not telling us which direction it really wants to go yet. Okay, this candle right here telling us we want to go up. This one, not so much. This bearish candle, we are dumping. This bearish candle, just hanging out for a little bit. So as you can see here, these 4 examples pretty much just represent an infinite amount of possibilities for a candlestick to look. But overall, we are either forming a bullish candle or a bearish candle. A lot of people that talk about candlesticks are always going to sort of lean on the fact that the body is the most important part of a candlestick. But for me, I am always taking into account the relationship between the body and the wicks that tell the complete story, right? So I want to take you through, let's go through a live example here from today. Let's try the 30-second. Let's look. Oh, here we go. Okay. Let's look at these 4 candles, okay? 1, 2, 3, 4. Okay, they're all bullish candles. They all have relatively small bodies. But I think that we could all agree that this first candle right here is telling a much different story than these 3, right? So without getting too deep into additional confluences and strategy talk and everything like that, what am I looking for when I am actively reading candlesticks in real time? Well, this candle right here, what are we doing? We open right here, we displace heavily to the upside and snap back down. So that's what I consider a rejection candle. Well, what did we reject right here? I might look at this swing high, okay? Or in other words, a liquidity sweep. Okay, now let's go over to the 1 minute time frame, see if there's anything there. Boom, perfect. What do we have here? 1 minute bearish fair value gap that we are trading into and displacing lower. Now you can see this is the candle we were just referring to. Now it's a bearish candle. Why is that? Well, now it's combining 2 sets of 30-second candles into one, which in the overall picture was a bearish print. So like I said, I'm not getting into complete strategy or anything right here, but I'm just showing you guys how I think in real time. We displace up, reject that 1 minute fair value gap, and what do we do after? Shit the bed. complete shit the bed. 200 points. That sounds simple when we're just sort of looking back at it. It's not as simple when we are reading price in live time, but you could see how I sort of put together a few confluences while I'm reading each individual candlestick to see, okay, what sort of market structure are we forming here? But as far as candlesticks go, I'm not going to sit here and try to overcomplicate a very basic concept in the market. What I want you guys to do though, if you are brand new and if you actually learned something from this episode, is just open up your trading view and just watch price. Just see how candlesticks form in real time. Cycle in between all of your time frames as they print and just see how they form. Really what I want you guys to do is just get used to seeing candlesticks move. Like I said, I'm not going to overcomplicate it. This is a very basic concept, but I still did want to take the time to be able to provide you with this information for free, just in case you don't understand what a candlestick is and the makeup of one. I don't want anyone coming into this whole sort of course and not understanding something and then feeling stupid for not understanding it, because no question is stupid. No concept is too basic. We all started somewhere, and that is why I am doing this for the love of the game, just to give you guys free information before you spend a single dollar, and that's the way it should be. So that is all for me. I will see you guys in the next lesson, which is going to be liquidity. Pretty excited for that because we're going to start getting into some shit here. Thank you guys for watching. If you have any questions, comment down below. Go watch your charts. That was Candlesticks. Love y'all.